Hey guys, welcome back. In this video, we are going to see one comprehensive problem from insurance claim under loss on profit. And this is the one of the comprehensive problem from loss and profit. We can with this problem we can cover any kind of problems from loss and profit. And this question has eliminated few parts of the problem. So I have included this area. You can see illustration 10 is completed with this area, but just for our comprehensive understanding I have added these few line items from the previous problem, and we are going to work it out. Okay. And the another one thing also I want to add is uninsured, which is rupees 6,000. Okay, these values also from previous question. This one, this one, this one, these are all from previous question. So for our understanding I have just included this also with the one problem. So this one problem should give us the entire understanding of the loss and profit. That's our sole motive. Okay, so what they are trying to convey to us is omega premises. Okay, 1 minute. Omega Limited. Fire date is March 15, 2023. Okay, policy amount given, which is 80,000 rupees. 80,000. Okay, indemnity period, which is the affected period, is 3 months. And net profit for previous financial year, which is 2022, which is rupees 56,000. And then standing charges, 49,600 plus insured standing charges. This is uninsured standing charges is 6,000. Uninsured standing charges is 6,000. Okay, then what else information we have given with usually I create a timeline for these kind of problems. For even if you are not get used out of it for this problem, you can use it for any other kind of problems from loss of profit. Okay, the fire date is March 15, 23. So it was affected till June 15, 23. 3 months, right? 3 months. So this is the affected period sales. We are not given with that information, so we'll give a question mark. Okay, and then this is the March 15, 22 to June 15, 22, which is the previous same period previous year. Okay, which is the standard sales for this. This is the standard sales, and if there is any upward trend, we need to add those back also to compare with this period. Okay, upward trend, and whatever that annual turnover till March 15 to March 15 2022 to March 15 2023 is this. So we are given with no information. We have to figure it out. We have to figure all these information out with the problems with the problem given here. Okay, now Okay, there is some unrequired information which is okay, no, it is required information only. Okay, so that's it. We have created the timeline. We haven't know any information about the standard sales, upward trend, affected period sales. No informations we are given with, so we have to find out all the informations out of these problem given in the question. And there is a period has been given wrong. I have corrected here. You guys also correct it in your books. Okay, let's quickly jump into the problem. These kind of problems are step based, which is for this problem we will take 8 steps, 8-step approach. Okay, what are all those 8-step approach? What are those 8 step? First one is trend. We are not given with the trend, right? Either upward trend or a downward trend. Mostly it would be an upward trend only for this kind of problems. Okay, upward. Then we have to find out the GP percentage, and then we need to find out the standard sales for the prior period during the previous year. Okay, affected period during the previous year. Standard sales, adjust based on trend we find out. Okay, next is sales during affected period we need to find out. Okay, then short sales, then loss of profit, then total loss of profit, then additional expenses, and then claim amount. So that's it. Totally there would be 9 steps. These 2 steps are included in one another, so I have given it as 8 steps. Okay, with this step we are going to find out the upward trend of sales compared with the information given for the prior period. So we are going to find out the upward trend or any trend which is with the sales happened during the previous last few years. Okay, and then GP percentage we are going to find out, and then standard sales of previous year has been adjusted with the trend we find out with the first step, right? And then the sales during the affected period, and short sales, difference between these two is the short sales, and loss of profit is short sales into GP percentage is loss of profit, and then total loss of profit considers the additional expenses incurred in business to create the additional sales, and then if there is any savings in insured charges. Okay, and then additional expenses calculation we have to do here, and then we have to find out the claim amount. That's it. This is one of the comprehensive problem in exams. There is very less chance that they'll be asking these kind of lengthiest problem, but by getting to know these kind of problems will make us stronger to handle any kind of problems from this area. Okay, that's the sole motive. Okay, first one, trend we have to find out, right? Calculation of trend. Okay, what are all the information we are given with? We have the sales for all the quarters, year sales for 4 quarters. Okay, here 2020, 2021, 2022 given. 2020, 2021, 2022 has been given here. So what's the total sales of 2020, which is we are going to calculate this amount. Okay, 1,20,000 plus 1,30,000 plus 1,42,000 plus 1,30,000, which is 5,22,000. sorry, this period. So this is the year wise. Okay, 1,20,000, 80,000, 1 lakh plus 1,36,400, which is 4,36,400. For next year, 1,30,000, 90,000, 1,10,000 plus 1,50,000, which is 4,80,000. Then for 2022, 1,42,000, 1,42,000 plus 1 lakh plus 1,20,000 plus 1,60,000. Okay, which is 5,28,000. Now we got the sales for all the previous subsequent years. Now we have to find it out that what's the trend happens between these years. Okay, rate of change in turnover or sales. Okay, turnover. Okay, turnover of current year is what? Turnover of current year minus turnover of previous year divisible by turnover of previous year. Turnover of current year is, for 2022, what's the upward trend happen? 5,28,000 minus 4,80,000 divisible by 4,80,000. The trend amount is 5,28,000 minus 4,80,000 divisible by 4,80,000, which is 10%. Okay. For 2021, what's the trend? 4,36,000. 4,80,000 minus 4,36,000. This is just the difference amount, and we are going to find out that difference amount is how much percentage to 2021. That's it. Okay, 4,80,000. Sorry, not 4,80,000. 4,36,400. Which is comes around 9.999. Okay, so 10% approx. So we can observe that this approximately increasing by 10%. So the upward trend is 10%. So we find out the upward trend. So we go and fill this area, which is 10%. We found out. The next step is standard sales. We need to find out standard sales adjusted based on the upward trend. Sorry, before that we have to find out the GP percentage, right? So step 2 is GP percentage. GP percentage we can find out by net profit of previous financial year plus insured standing charges divisible by turnover of previous financial year into 100. So what's the net profit of previous financial year? It has been given there, no? Net profit of 56,000. 56,000 plus insured standing charges is 49,600. Turnover of previous financial year is turnover of previous financial year, which is 2022, right? So we have found out that value, which is 5,28,000 into 100. Then 5,56,000 plus 49,600 divisible by 5,28,000 into 100, which is 20% of gross profit. Step 3, which is standard sales adjusted with upward trend. Okay, now we are not given directly with the standard sales, but we are given with the whole month value. Okay, so for the period April 1 to June 30, 2022 value is 1 lakh, right? April 1 to June 30, 2022 value is 1 lakh. Add What we need to add? March 16 to March 31st we need to add, right? Okay, that's a relevant period for this to calculate the standard sales rate, so we need to add. And in the question they have already given, which is 28,000. See, 28,000. And then we have taken the whole month of June, so we have to remove the 15 days, right? For that they have given the information, which is 24,000. See, less June 16 to June 30 2022, which is 24,000. So it comes around 1,04,000. So 1,04,000 into 10% upward trend, which is 10%, 110%. Okay, 110%, which is 1,14,400 is the standard sales, right? Then the fourth step, which is sales during the affected period. What's the affected period? March 16 23 to June 15 23, right? 15 23 to. Okay, now for this also we are going to follow the same approach. Turnover for April 1 to June 30 we are given with the information which is amounted to 40,000. See, 40,000. Let's take the 40,000 here. Add the relevant period March 16 to March 31st and remove the relevant period, which is June 16 to June 30. March is from March 15 days is nil, and June's 15 days is 6,000. Nil and 6,000. Okay, this comes around 34,000 is the sales during the affected period. So what's the short sales happened here? Short sales is equal to step 3 minus step 4, which is 1,14,400 minus 34,000, which is rupees 80,400, right? That's 80,400. Now let's go to the next one, which is loss of profit. What could be the profit loss for this 80,400, which is 20%, which is 400 into 20%, which is 16,080. Okay, the next step, total loss of profit. Total loss of profit includes additional expenses also. Okay, loss of profit we found out that, which is rupees 16,080 plus additional expenses for additional sales. Okay, minus any savings we did for the period, it comes to total loss of profit. Okay, right? So now we have to find out the additional expenses, which is additional expenses is the least of the three items, least of the three values. The first one is actual additional expenses, which is how much is the actual additional expenses? See, cost of working capital. Okay, they have incurred the working capital by 12,000. This is the additional expenses incurred by the company, which is 12,000. Okay, the next one is GP on additional sales due to additional expenses. Okay, how much is the additional sales given in the question? You can see that reduced turnover avoided through increase in working capital. Okay, they have reduced the turnover and due to the increase in working capital, and they have made the sales of rupees 30,000. By incurring this 12,000, the company has increased the sales by 30,000. That's what that sentence is meant to be. So 30,000 is the additional sales, right? So 30,000 into 20%. 30,000 into 20%, which is 6,000. The third one is actual additional expenses into GP on annual turnover divisible by GP on annual turnover plus uninsured standing charges. Okay, what's the GP on annual turnover? What's the annual turnover? First we need to find out the annual turnover. So working note on working note, which is annual turnover. Okay, what's the annual turnover period? From March 16, 2022 to March 15, 2023. This is the prior to the immediate day of fire. So like the same method, we have to find out the annual turnover also. So what all the informations we have? We have 1,30,000, 1,66,000, 1,20,000, 1 lakh, right? This is the 4-quarter value. From this we have to make some additions and deletions. Okay, $5,60,000 is the 4 quarters from April to March 31st, 2023. April 1st, 2022 to March 2023. Okay, so this is the amount. This amount includes $1,30,000 plus $1,66,000 plus $1,20,000 plus 1 lakh, right? So we have to do some additions, which is we need to add the relevant period, right? What's the relevant period? So let's take the relevant period. Relevant period is March 16 to March 31st of 2022 and March 16 to March 31st of 2023. This is the irrelevant period to calculate the annual turnover. Okay, so what's the March 2022 value, which is 28,000 and nil. Okay, nil. 5,116,000 plus 28,000, which is 5,44,000 is the annual turnover. Okay, what's the GP on annual turnover? Let's calculate the GP percentage. Before that, we need to we need to do the trend work also. No, upward trend. That is upward trend, right? In the question itself, they have clearly said that increase in turnover for standard and as well as the annual turnover. We did it for standard, so we are doing it for annual now. 10%, okay, into 110%, which is 5,98,400. Then GP percentage, which is 20%, right? into 20%, which is 1,19,680, which is GP on annual turnover. Okay, we found out the GP on annual turnover, which is 1,19,680. So actual expenses is 12,000 into 1,19,680 divisible by 1,19,680 minus what's the uninsured add or okay, add uninsured standing charges. What's the uninsured standing charges? Is 6,000. Okay, 6,000. Now let's calculate. 680 plus 6,000, which is 125, 680. Okay. $12,000 into, okay, this whole way 680 into 12,000, which is 11,427 is the amount for the third item, which is, so least of this item is 6,000. We are going to take this value. So let's take the 6,000 here. What's the savings? Savings is 4,500, right? See, savings of uninsured standing charges, which is 4,000. So we have to deduct that amount also, 4,000. So 18,080 is the total loss of profit we found out. Now let's find out the claim amount, the last step, which is step 8, claim amount. What's the policy amount? Policy amount is 80,000. GP on annual turnover is 1,90,680. That is the under insurance. So 18,000. So loss on profit into policy amount divisible by GP on annual turnover. If we do this, if we work out with this problem, so work out with this formula, we can find out the claim amount. So loss on profit is what? Which is 18,080, right? Okay, 18,080 into policy amount, which is 80,000 divisible by GP on annual turnover is 1,19,680. So 18,080 into 80,000 divisible by 1,19,680, which is rupees 12,086 is the actual claim amount. So this would be differ from the book problem because we have added some other line items to understand the comprehensive output of this problem. So I would just want to give a recap of what we have done here. So they have said that fire occurred on March 15 and the policy amount they have paid, the policy amount is 80,000 and the indemnity period is 3 months, and the previous year net profit has been given, which is 56,000, and insured standing charges, uninsured standing charges given. And they have given the sales for every quarters for the 4 years to find out the trend, because they haven't given the trend. Usually every sum they have given trend, but in this problem they haven't given a trend, but we have to find out the trend with the sales amount which has been given here. So this is the usual timeline I prepare for every problem to make the problem very easier. So okay, this is the affected period, this is the standard period for the previous year. Okay, the same period. Okay, what's the standard sales? We have to find out with the upward trend done here, and the affected period with sales. We have to compare both this to find out the short sales. Okay, we have reached this method. Okay, first we need to find out the upward trend, find out with the help of sales for the relevant period, and then we done the rate of changes in turnover, and we assume that, and we found out that upward trend is 10% for every year, and then we found out the GP percentage with the net profit of previous financial year and insured standing charges and the total turnover of previous financial year, and then we found out the standard sales, and then we have given with one period, but there is a relevant period and there is a irrelevant period inbuilt with this the first line item. So we have added the relevant period, and we have removed the irrelevant period, and we found the, and we did the upward valuation, and then we found the standard sales. Same we done for sales, and then we found the short sales, and then we calculate the loss of profit, and then we did the calculation for total loss of profit, which actually includes the additional expenses and savings from the savings done during the disruption period, that has to be removed from the loss of profit. So additional expenses, there is the three things we have to consider, which is actual additional expenses, or gross profit on additional sales due to additional expenses. So I have incurred additional expense of 10,000. For that incurred 10,000, I have got 1 lakh rupees as 1 lakh rupees as sales. So on that 1 lakh on that 1 lakh sales, we have to find out the GP percent. That's what they are saying here. Okay, we found that value also. Actual additional expenses into and then the third line item is actual additional expenses. With that, we are calculating the we are multiplying the gross profit and annual turnover divisible by gross profit annual turnover plus uninsured standing charges. With that, we have derived one formula. So how can we find out the annual turnover is, this is the same procedure for every period value while we are calculating. We have to done the include the relevant period, and we have to remove the irrelevant period. So annual turnover we found out, and upward trend we have to done, and the GP percentage we calculated. This is the GP on annual turnover. That's it, right? So least of this value is the additional expenses. So we have to add these additional expenses here, and then we have to find out and then we have to remove the savings from this period, and we found the total loss of profit. From the total loss of profit, we have to find out. We are going to find out the policy amount and GP on annual turnover. With this, we can understand whether the policy amount is underinsured or overinsured or balanced. Okay, so we found out that is underinsured. So underinsured underinsurance, we have average clause is applicable. So we are averaging out, and we found out that 12,000 is the claim amount from the insurance. Thank you.